Imagine planting a tiny seed today and watching it grow into a colossal money tree in the future. That's the power of investing. But where do you start? Stick around as we unveil the secrets to stepping into the investment world, even if you're an absolute beginner. First, let's address the big elephant in the room. Investing isn't just for the rich or the financial gurus. With the right knowledge and strategy, anyone can begin their journey towards financial prosperity. Why should you invest? Investing is the art of putting your money into avenues where it actively generates more value. While savings accounts offer safety, their returns often don't outpace inflation, meaning your money's purchasing power diminishes over time. On the other hand, investing propels your money into higher-earning assets, leveraging the power of compound interest. This phenomenon, often termed the eighth wonder of the world, means your returns generate their own returns, creating an exponential growth effect. Thus, by investing wisely, you don't just maintain your wealth, but significantly amplify it, ensuring that every dollar you put aside works diligently for your future. The risk-reward balance. Starting your investment journey requires understanding the balance between risk and reward. In simple terms, if you're aiming for higher returns, be prepared to embrace higher risks. However, it's not about jumping into the riskiest ventures blindly. Instead, it's about recognizing your comfort level with risk and choosing investments accordingly. Think of it like choosing spicy food. Some can handle the heat, while others prefer milder options. In the world of investing, it's all about finding that sweet spot where potential returns align with how much risk you're truly comfortable taking on. Your goal? A balanced portfolio that matches your risk appetite. Starting with a clear goal. Investing without a goal is like setting sail without a destination. Are you saving for retirement, a down payment on a house, or perhaps your child's education? Your investment choices will largely depend on these goals. Understand the basics. Arming yourself with knowledge is key, especially in the realm of investing. Terms like stocks, bonds, dividends, and mutual funds might sound like jargon, but they're the building blocks of your financial growth. Think of them as tools in an investment toolbox. And just as you'd learn to use a hammer or a screwdriver, getting acquainted with these terms empowers you to build your financial future. While it might seem daunting at first, don't fret. We're here to simplify and guide you through each term. After all, understanding the language is the first step towards mastering the art of investing. Different investment options. 1. Stocks. Stocks represent ownership in a company. When you buy a stock, you become a shareholder, and your fortunes are tied to the company's performance. Stocks have historically provided the highest returns among all asset classes. 2. Bonds. Bonds are debt securities issued by governments, municipalities, or corporations. When you invest in bonds, you're essentially lending money in exchange for periodic interest payments and the return of your principal at maturity. Bonds are generally considered less risky than stocks. 3. Mutual funds. Mutual funds pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. They offer diversification and professional management, making them suitable for beginners. 4. Exchange-traded funds, ETFs. ETFs are similar to mutual funds but are traded on stock exchanges. They provide easy access to a wide range of asset classes and are known for their low fees. Picking the right investment platform. In today's digital era, investing has become incredibly user-friendly. Thanks to online platforms and robo-advisors such as Robinhood, Betterment, and Wealthfront, jumping into the investment realm is just a few clicks away. These tools simplify the process, often using algorithms to give personalized advice. It's like having a financial advisor in your pocket. Before diving in, take a moment to explore and understand each platform's offerings. Choose the one that aligns with your investment goals and comfort level. Remember, With today's technology, growing your wealth has never been more straightforward. The power of diversification. Don't put all your eggs in one basket is timeless advice, especially in the world of investing. The essence of this saying is diversification, a strategy to spread your money across different types of investments. By doing so, you lessen the chance of a big hit to your finances if one sector underperforms. Think of it as a safety net. While some investments might falter, others could thrive, balancing out potential losses. In essence, diversification is a shield against market unpredictability, ensuring that a downturn in one area doesn't spell disaster for your entire portfolio. It's about playing it smart and safe. The importance of consistency. Building wealth isn't about occasional big leaps, but rather consistent, smaller steps. Think of it like a dripping faucet filling a bucket. While each drop seems insignificant, over time, they accumulate into a significant amount. Regular investments, be it monthly, quarterly, or annually, harness the power of compound interest, allowing your money to grow exponentially over the years. This method not only eases the investment process, but also capitalizes on market highs and lows. Over time, these consistent contributions can dwarf one-time investments, leading to substantial financial growth. In the investment world, persistence and regularity truly pay off. Stay updated, stay ahead. The financial landscape constantly shifts due to various factors like global events, economic policies, and market dynamics. Staying informed is essential. By regularly following market trends and economic updates, you equip yourself with the knowledge to make smarter investment choices. Think of it as navigating a road with a map. Being updated ensures you're aware of any turns or obstacles ahead. Whether it's through news, financial journals, or expert analyses, keeping a pulse on the financial world helps you adapt, seize opportunities, and avoid potential pitfalls, ensuring your investments remain robust and fruitful. Patience is your best ally. Building a strong investment portfolio takes time, much like Rome's construction. Markets will inevitably fluctuate, experiencing highs and lows. Instead of reacting impulsively during these downturns, it's essential to keep a long-term perspective. Quick decisions may lead to short-term gains, but can compromise long-term growth. By practicing patience and staying committed to your investment strategy, you allow your assets the opportunity to recover and grow. Think of market downturns as temporary storms. If you remain steadfast, the skies will clear, and your investments have the potential to flourish over time. Remember, patience is an investor's best ally. In conclusion, investing is a journey, not a sprint. Like any expedition, it requires preparation, knowledge, and perseverance. While the financial realm might seem daunting initially, equipped with the right tools and mindset, anyone can navigate its waters to achieve financial prosperity. So, embark on your investment voyage with clarity, consistency, and patience. Remember, every financial giant once started as a beginner. Your journey to building wealth starts with that first step. Seize the opportunity and let your money work wonders for you.